All right. Welcome back to another episode of the Real Estate Investing Club. Happy Friday, everybody. As always, we're bringing that Friday energy to you guys. It is the end of February, which means spring is right around the corner. I am excited. Here in Washington, we kind of have, there's two seasons. There is the summer season that is absolutely fantastic. And then there is the winter season, which lasts pretty much, 9 months out of the year. And so once we hit spring, we're all like rooting for the sun to come out. So I'm getting stoked. I hope you guys are having a good time too. It's a good day for a second reason because we have Joseph Downs with us, Joe Downs. He is here from Belrose Group, and he is all about self-storage, which is one of my favorite asset classes, as you guys know. So I'm super excited to jump into this. Joe, thanks for hopping on.
Hey, Gabe, thank you so much for having me. And it's funny to hear you talk about the weather. I'm sitting here outside of Philadelphia, and I won't get these right, nor do you want to hear them all, but we have a joke here that we have 12 seasons. So, and some of them are like fall, fake fall, or false fall, or something like that, because our weather it just goes
Up
up and
and
down.
down and up
Honestly.
and down. Yeah, over
You
on the
tell
East
me,
Coast, I feel like
yeah.
I'll see what news reports of you guys are in a blizzard, and then all of a sudden
And
it's
then it's
it's
60
hot. And...
degrees 4 days later. It's wild. Anyway,
That's funny.
yeah. So, thanks for having me. It's a pleasure to be here.
Yeah, absolutely. I told you right before we get on here, we always like starting with stories. We like to hear how people got to where they are. Sounds like you got a good one. So why don't you take us to the beginning of your story in real estate and
Okay.
tell us how you got here?
Yeah, so I'll try to be brief, but it's a tall task because I what I've learned is that I was always a serial entrepreneur and I just never really realized it. Wasn't always necessarily in real estate, but that was just part of my journey. So I will take you from the beginning and I'll try to be brief. So shortly after college, I spent most of my 20s as a financial advisor, actually. Series 7 licensed financial planner, beginning glorified financial planner and stockbroker, et cetera. And then 9/11 happened, and I was already not feeling this as my long-term career goal. It was just a business that I don't want to downplay the stock market. I think it's important to have maybe a portion of your portfolio in it, but it just wasn't for me to operate, going forward. It's a casino at the end of the day.
Yeah, yeah.
And
I've been bit too many times and I just I
Yeah,
don't do it anymore.
and I've seen people get hurt at the wrong times, like 9/11. If you were trying to retire around 9/11 or, any of the crashes, right? Your life was turned upside down if you were solely dependent on your investments in the stock market. So that and other reasons, I decided it just wasn't for me. And shortly thereafter, and again, the signs were there that I was an entrepreneur because I've always had multiple jobs. So even though I was a full-time financial advisor, I was always bartending,
Mm.
and bartended for 10 years when I was younger. And there was an opportunity to buy a bar and restaurant
Hmm.
that I had worked at that got closed down. It was a Villanova bar actually that got closed down, and so I bought it, left the financial world, bought it, to check that box, right? Every 30-year-old guy's dream is to own a bar, right?
Own a bar.
Not a
That's
dream,
actually
people. Not a
that would
dream.
be full. I don't know. How was it? You tell me.
Well, the bar part was great, right?
Yeah,
It's the kitchen and running
yeah,
the staff. It's just a
yeah.
nightmare. But I will say this, I was 30-ish years, 30, 31, whatever. I didn't make it quite a year.
Mm.
Like 11 months and change, probably lost around 100 grand. It was
Mm.
not a fun time, not a good
Man,
experience. It started out great, and then it was a slow, miserable decline. And learned a lot of life lessons there, a lot of business lessons there. And
I always I don't mean to jump into your story. I always want to talk to restaurateurs about their, starting their business because that is, it is touted as one of the most difficult businesses to actually become successful is running a restaurant. So what was I'm just curious going on a side note here, but
yeah,
what is difficult about running a restaurant? How did that, what was the decline for you?
the kitchen and the staff.
Yeah.
So if you are not a chef, which I am not, you don't want me in a kitchen. You don't understand how a kitchen operates
Mm.
from the cost overhead, from food spoilage to literally theft. I mean,
Mm,
you're in an
mm,
industry where theft is common from your staff
yeah.
that, you hug goodbye and they've got fillets in their backpack you don't know about, like stuff like it. So it's just, and then that's the back of the house employees. Then you got the front of the house employees who, who are they? Maybe they're college kids or they're in their 20s and they're working multiple jobs. But think about the lifestyle for, and this, I don't mean to paint
Yeah, yeah.
everyone with a broad brush, but a lot of them are not reliable, let's just say, because they had a big night the night before, right?
Mm,
And they call out sick 20 minutes before their shift, and they're the only one working lunch that day. Now you're working lunch as the owner. It was just it was working 100 hours a week,
mm.
really making any money and not knowing that I was getting bled to death out of the kitchen.
Yeah,
So that's one
makes
of my life
sense.
lessons. People always ask me like, what's one of your life lessons or what, in any business, what is the one thing you've learned that you have to stay on top of? I'm like, and my saying is keep your head in the kitchen. You got to
Mm,
know what's going on in your kitchen. That's your operation. The bar
yeah.
is easy. The bar is fun. It's so many drinks out the door. You know what you're selling. You know what you're ordering. There's no spoilage, right? Liquor doesn't go bad.
It's
Beer really
alcohol,
doesn't
yeah.
go bad in bottles or kegs. The worst thing that happens is your bartenders give away drinks, but so what? They're creating a fun atmosphere. And by the way, the drinks they're giving away are, they cost nothing in the end of the day in draft beer,
Yeah,
right? I
right.
mean, they're not giving away top shelf items. So you don't really get hurt in the bar. It's the kitchen that is the most difficult. And that's why you see all those shows like Iron Chef and Kitchen Rescue or Bar Rescue or whatever. It's always about the kitchen.
Yep.
It's never usually about the bar unless it's like, the aesthetics or something like that, or how you market it or what kind of place you are. But
Mm,
it's I have the utmost respect for anyone who successfully runs one and then actually grows them and
yeah,
runs more. It's just they walk on water to me because
another level.
it
A lot
is.
different than self-storage, I'll tell you that much.
I have had so many people approach me about getting back into the business. No, thank you. I have talked people out of getting to the business. It's a brutal lifestyle too.
Hmm.
I try to keep a relationship with a wife or a girlfriend or something. It's a tough business. But
Yeah.
fortunately, I failed, or it's probably still be in it. So, and I licked my chops, and I went on. I knew whatever I was going to do next was not going to be my long-term vision because I had always wanted to be in real estate. I kind of skipped over that. I always wanted to be in real estate, and I just couldn't find the right path into it. Um, During that time, after 9/11, and this was before the bar, but that was a Tuesday. That markets were closed that entire week, so we had nothing to do. I think we even played golf. It was like September. It was beautiful out, but there was a lot of soul searching being done. Do I want to do this? And one of the realizations I had too, following my passion about real estate, or the fire burning inside me. I shouldn't say it was a passion. It was just a really desire to get into real estate somehow, some way. I was reflecting on who are the two wealthiest people I know. And I don't mean Warren Buffett and Bill Gates at the time. I mean, like, if I
Who do
call
you
them,
know? Yeah.
oh, yeah. Hey, Joe, what's going on? And they were both in real estate. One was a developer, and one was he buys and manages multifamily properties.
Mm, okay.
And so I talked to both of them, and they weren't a viable path for me, nor was I really asking. I was just looking for advice, and it was all about timing too. And then I went off, and the bar opportunity presented itself. I went and did that. And when that didn't work out, I had to, I probably took a couple weeks off and you know
Lecture wounds.
wallowed in my misery. Yeah, wallowed in
Yeah.
my misery, whatever. And my brother-in-law suggested I hooked me up with a guy I interviewed at a talk radio station in Philadelphia
Hmm.
to literally sell advertising. Remember City Slickers and Billy Crystal was like, I sell air. I sold air for a
All
year and a
right.
half. And I knew I wasn't passionate about it. It was interesting. It was different. I met a lot of interesting people that came through the radio station, like people that I would have no business meeting, in my life, like celebrities and stuff like that. So
Yeah.
that part was interesting, but the job sucked. Like, this wasn't a job I wanted. So the two of my clients, as luck would have it, you just never know. If you stay positive in life
You
and
can't
just
connect the dots until
you can't
you're
connect the
through it.
dots. But who were two of my clients? First one, company called Real Estate Riches. I don't think they're around anymore, but they would advertise on the radio for people to come to their seminars. Now they'd be webinars. Back then we had to show up in person, right? They were seminars at like hotels, and they would teach people, they were selling people mentorship programs that teach them how to buy, rehab, and flip or rent real estate, single
Oh yeah.
family home.
Hmm.
This is right up my
I've been to
alley.
a number of those. Yep.
It's what I want to do. And here they are, my client, right? So I'm at these events. I'm really taking it in. I buy their course. I go through their mentorship, and I'm out there. By the way, now I have three jobs. So I'm selling radio. I'm still bartending, and now I'm out on the weekends, Saturday and Sunday mornings in Philadelphia, walking through 15, $20,000 rundown you know nearly, full gut rehabs, let's say it that way, properties. And I was broke, so I didn't have money to buy them. So I started wholesaling
Mm.
and started making some money wholesaling. I got a partner, and we bought a couple, and we were renting them, and that was, those dealing with
Dabbling.
those tenants
Yeah.
wasn't. There's no
Figuring
money.
figuring yourself out. Yeah.
Yeah,
That's
it's
how we all
like, oh,
start.
if we get 10 of these, we can make, $1,000 a month. Like, what are we doing here? And then, I think we flipped one or two. And I'm still on radio. And then my next client comes along, and actually, it's one of the clients that I know. And he's a developer, and they want to advertise their really upscale condos. So that's why they're doing it on talk radio.
Mm.
They want to drive traffic into their upscale condos just outside the city. So it wasn't him, but I was talking to his sales guy, who I still am in touch with today. In fact, I'm having coffee with him next week because he's my broker. I have my real estate license. He's my broker. But he connected me with his buddy, who I think they were dads at the same school type of thing. He's like, hey, he's looking for a sales guy. He needs somebody to raise money for 1031 exchanges. We're like, great. What does he do? He's like, oh, they buy multifamily and office buildings, and they fund the equity with all 1031 exchanges. Great. Let me go interview. Gabe, I don't know the first thing about commercial real estate or what a 1031 exchange is right now, right? But I'm interested.
But let's
And
do it.
yeah, let's go figure this out. So I interviewed with the guy, and he knew I didn't have the right background, but although the way they sold them was as securities, and I did have a securities license. So I came on board
They
kind of as,
sold their positions in their syndication.
so the syndications should actually always be securitized. They should,
Right.
according to the SEC, every syndication is a security and should be
Right.
registered
Right.
or
Right.
non-registered with your 506B and C, right?
Yeah.
That exempt from registration. So, but you are supposed to sell them. You're supposed to have a securities license when you sell them, right? So our clients were
Wait,
actually,
sorry. Pause there.
yeah.
So you're supposed to, that's not necessarily true, right? You don't need a securities license in order to register a 506B or C.
Let me make a point of clarification for you because I see you getting nervous. Not as the principal, but to get paid a commission to raise money on behalf of somebody,
Oh,
it
interesting.
needs to be
Okay.
done as
Yeah.
a security.
Yeah.
So no, for my company, I raise money directly. I do not have a securities license anymore.
Yeah. Okay.
That is completely legal. What you're doing in your syndications is completely legal.
Yeah.
If a friend says, "Hey, I'll raise money for you," that now
They
needs,
have to have a securities
yeah,
license.
that's got to go under securities umbrella.
Got it. Interesting. I actually didn't know that.
So yeah, I didn't mean to scare you there. So so our what he was doing was called the Santo Realty Group, and this was an entire industry that did this. We were Our clients were actually the broker dealers, alternative investment broker dealers. So I spent most of my time on the West Coast. That's where they mostly were. And their clients were the ones doing the exchanges. So it was my client and indirect client because the investor was ultimately investing with us, but there was the broker dealer and the rep in between getting a commission. Um, so I had that background and I knew that language and I knew how to, and he was new to the space. So it worked out well. I learned commercial real estate over the course of the next year and then became the national sales manager.
Hmm.
And I ended up raising, 90 some $1 million for the different syndications we did.
Oh, wow.
Um,
That's great.
and then this is my second time having to read it. So that industry went in 2006 or seven, I forget. We as an industry, there was $4 billion done. We were only, 100 million of it or whatever, but there was $4 billion of 1031 exchanges done in securities that in 2006, I want to say, maybe seven. And then if you remember what happened in 08, 9, and 10, that industry went poof
Hmm.
because no one could get debt to buy anything. No buyer, no seller, no seller, no exchanger. The industry went from 4 billion to I think by 2009 or 2010, it was a $250 million industry. Think about it.
Wow, that's crazy.
I was already
Like
gone because
10%. Yeah.
I'm
Less
working
than
on
that.
commission pretty much. There's nothing to sell.
Yeah.
There's no money to raise. So now I'm reinventing again. So now I'm out there reinventing. I go to a tax lien seminar. I'm in real estate now, by the way. I'm still bartending. No, wait. I'm not bartending anymore. Thank God. I was down to two jobs. Just still doing real estate on the side, and then raising money for different syndications. I had moved on to different syndications because the 1031 exchanges were done. So I was raising money for distressed debt fund,
Hmm.
for hotel syndications,
Okay.
and
Interesting.
actually in an oil and gas fracking company. So
Hmm.
I learned a lot about various alternative investments, right, and
Yeah.
various real estate classes. Not an expert in any of them, just learned about them.
Yeah.
Enough to be dangerous to have
Have a
a whole
conversation.
conversation. Yeah.
Yeah.
So I'm reinventing again. I'm back in Philadelphia. I go to the Pyramid Club for this tax lien seminar, and I'm introduced by the host of this thing, which is why I was there, to a guy who became my partner, Tom Dunkel, in a different business, distressed debt. So we ended up meeting. We lived near each other, and we ended up meeting and starting to talk about different real estate deals and this and that. And he was coming out of just getting hurt in residential because he invested a whole bunch of money in 2007 and got crushed. Terrible timing on his part. But so next thing you know, we stumble upon reperforming second mortgages, residential second mortgages. I go to another seminar and I'm learning about this stuff. I'm like, wait a second, if these guys are selling these reperforming second mortgages for 25% yields, 25%, right? And 25 to 30% yields, right? And I just raised $90 million at 6.5%. I mean, if you had a seven handle on your deal, you sold out in like 2 days, right? I'm like, what's going on here? There's got to be margin for a business here if this is this good, and we needed to understand the risk profile, obviously. So we set out to learn that business. We bought non-performing notes. First, we
Yep.
bought reperformers in our IRAs just to see what the business was like. Then we bought non-performers and started getting them reperforming. And sure enough, the yields were 50, 75, 100% returns. And we were like, my goodness, this is incredible. So we started raising, friends and family money after putting our own money in. And then we started building a business. And long story short, we're probably one of the largest buyers of charged off residential second mortgages in the country, which is to say, we're a big fish in the world's smallest pond, right? Nobody knows. We would be laughed out of any debt conference because we're nobody, right? But it's been a very, very good business for us.
Interesting.
So just buying the debt.
So you guys you said second mortgages, not
Yeah.
non-performing notes currently.
Non-performing second mortgages,
Non-performing.
residential second mortgages. People thought we were
So
crazy.
like
And
HELOCs, is that what you're talking
yeah,
about?
HELOCs. Yep. Yep.
Interesting. So
Home
they're
equity loans and home equity line of credit. Yeah. Whether they're
so
purchase money loans or taken out later.
so you
Yeah.
guys go and you will buy a non-performing second mortgage that already has a first mortgage on the house. You don't buy that first mortgage.
Nope.
And so the first mortgage is still performing.
In a lot of cases, yes. Some cases, no.
Interesting.
Look
Huh.
at you.
That
Look at
is
the doubt on your face.
no, no,
We're gonna have
it's
to do
just
we're gonna have to do a whole nother one just on.
like you
I'll make a
said,
whole
that is
breakdown on
that's
distressed debt.
well, that's one of the reasons why I love real estate is there are so
Yep.
many ways to do it. There is a countless, endless number of business strategies, models
Yep.
to make money in real estate, and this is one that I hadn't heard of, and now I have, and
You
I totally
you
believe you
can't
guys
you
are.
can't put a price on the value of someone's home when it's where they live, it's the township they live in, it's where their kids go to school. You can't, we call it emotional equity. On paper, people should not pay us to get their mortgages reperforming. On paper, they should go, we're underwater, we're walking away, right?
Mm,
If you were a commercial investor, but that's what you'd do. But this is your home. And so it doesn't matter they obviously they want to keep the first performance so they stay in the house, and that's important to us as well, and we price our loans based on that. But it doesn't matter if they have equity in the house. If that's their home, they're going to figure out a way to stay there, and that's what we do. So we've bought over 15,000 loans in our 15-year history, and we foreclosed. I know we foreclosed 3 times. We might have foreclosed a fourth, but I don't think so.
Wow, that's crazy.
It's
Huh.
just, but it's not just because we're white knights.
Yeah.
We don't want to foreclose on people. I've never wanted to put anybody out of a house.
Yeah.
But it's also because the homeowners want to stay. So it's really just finding the win-win middle ground, and then
Mhm.
we always find it. I mean, 3 out of 15,000 or whatever the math is, 3 times we didn't. I
Yeah.
mean, you have to be a complete jerk to force us to foreclose on you.
Yeah.
And by the way, it's been years. We've probably gotten better at what we do to even avoid it more. But I don't
Yeah.
think we foreclosed on anybody in 10 years. I
Yeah.
think it was
No,
5 years.
that is great. So where do you even so second mortgages, where do you go? Are you guys just calling banks and looking for non-performing notes, or
Yeah.
how do you go and
So we
find them?
used to buy from we used to buy from guys like us
Mm,
who had the relationships with banks.
mm,
Now we over the time we were able to get a seat at the table with the banks themselves. And
mm,
then what we did, this industry was like the wild, wild west. And the reason we got to the top of it, I don't know if we're the number one or not, but we're up there. I know that. But we did it through um, execution and doing what the banks want, doing what we said we would do, but also doing what the banks wanted us to do. They don't want to be headlines. When they sell these loans, it's not revenue events for them. They're getting rid of problems, but they don't want to get rid of problems just to get rid of them. They want to put them in a safe place where they'll never hear about them again. So, for instance, and we also sell these loans. So we'll buy big pools. We mostly work them out. We try to put everybody in a loan mod we can, but if we can, after a while, we've folks that have learned how to do this business as well, and they'll buy them from us. Um, we had one guy we sold to, kind of on a tangent here, but that's all right. We're gonna get that. I'm gonna bring it all back. We had
yeah, we're
one
not
guy
going to
we
title
sold
this
to.
self-storage anymore. It's about second mortgages.
Well, I mean, they're interesting
Yeah, yeah,
subjects.
yeah,
They
it
tie
is.
together, actually. How I got into self-storage ties, but um, we had one guy we used to sell to who thought it would be a good idea to do an interview with the Wall Street Journal for his business. So he starts talking to the Wall Street Journal about where they're buying loans from us, and then the Wall Street Journal tries to get us to comment on it. I'm like, no, thank you. Would never return a phone call because I don't want them to know where I'm buying the debt from because the lenders don't want to be in the Wall Street Journal saying they're
Yeah,
selling the loans. They want to
yeah,
get rid of the problem quietly,
yeah.
and they want it taken care of in a with a kid glove sort of way, so that everybody wins in the end. They wrote them off, and guess what? The homeowners win. They're always saving money. There's always the debt. If the balance was 50 grand, they're never paying that.
Mm,
It's always a lesser amount,
yeah.
right? And there's always a really good workout we do with them and a really good loan mod. So everybody wins in the scenario as long as we stay out of the paper. And
So,
it's nothing illegal about it. We're just like they don't
yeah,
want to be
yeah, yeah.
headlines in the paper, right?
Right.
So
No, I get it. I get it.
yeah,
From a bank's perspective, they're looking at their brand and they don't want to be known as the bank that's,
yeah.
you
And,
know,
and really what they don't want to be known as is the bank who sold, somebody's grandmother's loan, who big bad US mortgage resolution showed up at their door and yelled at her, said you had to pay her loan, and then foreclosed on her and threw her out of her house. Like that's
mm,
how the article would read,
yeah,
right? That's what they don't want because
yeah.
they're not in the business of resolving loans. They're in the business of making loans and demonstrating trust and reliability to you, so you park your money with them.
Yeah.
That's what the business the banks are in. So they don't need
So
the noise and the garbage.
on these HELOCs, I'm just gonna say HELOC. I'm sure there's other versions of it,
It's
but
fine. He looks fine.
yeah. On these HELOCs, so let's just give an example. They took out $100,000 HELOC on their home. They stopped paying. How much does the bank write off? Like, what are they trying to sell these out for?
I'm not going to give you a specific answer to that, but I will
Mm,
say this. The characteristics of the loan, some of which you've already either you've picked up on probably, does determine the price. So like you said, you asked earlier, is the homeowner paying the first?
mm,
That is a huge, so the number one price driver for us is it secured or unsecured?
mhm,
So if it's still secured, I'm buying it. If it's unsecured, there's a price for it, but it trades more like credit card debt at that point. It's a
mm.
completely different collection play because
Can
it's
you get
not
a
attached to
HELOC
the house.
that's unsecured?
Can you buy a HELOC that's unsecured? Yeah,
No,
the first
can
one.
you get a HELOC? Like if I were a homeowner, I thought HELOCs are always secured by the property.
Oh,
Second,
they are.
in second position, but
They 100% are. That's the H part of the HELOC, right? It's the
right,
home equity.
right, right, right.
Um, When the first forecloses, if the first forecloses, it is
Oh,
now an
unsecured.
unsecured loan. It's still a loan, not
Oh,
attached to a
interesting.
house.
Right. Okay.
So they have a price, but that price is more like credit card debt
Yeah. Okay.
because there's
That makes
nothing,
sense.
there's no asset to go after. It's
Right.
only the promise of you to pay or not,
Yeah.
right? So that is the single biggest driver of prices, secured, unsecured.
Mm.
After that, is the first current or not. So if the first mortgage is current, I don't even care about equity, although equity starts to matter. Equity can start to influence the price, but I don't care if you're underwater by 10 grand or 100 grand. It doesn't really matter. You're underwater. The value of the loan in that case is your emotional equity in that home. You don't want to lose it because on paper, I'm underwater. What do I
Right.
have? I have your desire to stay in that home and to start making payments on your second mortgage. Now you might be saying, well, why would they? What can you do if you're underwater? Well, I could still foreclose.
Right.
I have that right as the second lien holder. It may not make financial sense for me to do it, but I could.
Yeah.
And or I could sit on it and do nothing, but that mortgage, that loan is still there. It's still accumulating interest and
Yeah.
late fees and arrears. So you're not doing yourself a favor by ignoring it. You
Mm.
are doing yourself a favor by addressing it, especially with a company like mine who's going to cut you a deal.
Yeah.
So the drivers of price are secured, unsecured. Is the first mortgage current, which removes all of our risk, right? Now I'm not paying the same amount for those. So the single best the loan we'll pay the most for would be secured, current first, full equity. Like
Oh, yeah.
$500,000 house,
Yeah.
$200,000 first, $50,000 second.
Got
Can't
it.
lose money there. I'm paying the most for that loan.
Yep.
Paying the least for, forget unsecured. I'm paying the least for underwater. First mortgage is in foreclosure. Like there's a chance, but it doesn't look good, right?
Yeah. Yeah.
But I have to
Huh.
buy the whole pool when I buy it from the bank.
Right. That makes sense.
So I have to price each loan individually. So I got to take the good with the bad.
Yeah. That makes sense.
And then,
Interesting.
a guy like you, Gabe, would be like, hey, I've got, 100 grand, 200 grand. I want to buy 10, 15, 20 loans from you, whatever it looks like.
Yeah.
And then, do the workouts yourself or whatever. So that's
We
that
talk
business.
we
We
talk a
never
lot
got the
on this
first.
podcast about shiny object syndrome, and I'm feeling that shiny object syndrome. I always say, focus on what you're good at and just keep going down that hole,
You
because
have
there are
the
so
worst,
many ways.
you have the worst possible guest if you wanted to stay on track and avoid the shiny.
All right. Well, that was an interesting segue there. But let's get back to
Yeah. So
let's
even
get
that
into
business,
self-storage. So
yeah,
so you
even that
got in.
business,
Yeah.
sorry, even that business is not immune to cycles.
Yeah.
So it's funny. I just got a text this morning about the CFPB, and I think they finally killed it. The CFPB effectively killed our business for 3 years. We couldn't buy loans from banks because they made it so onerous on the bank. They put regulations on the banks that made it not worth it to even sell.
Hmm.
So I'm now reinventing again. I just had a good thing we built, and now I'm reinventing again because I don't know if it's ever coming back, right? This
Hmm.
business could be dead. So I mean, we didn't think it was dead forever, but it was definitely dormant and it was 3 years.
Yeah.
So during that time, been to a lot of alternative investment, real estate conferences, debt conferences, you name it. I'm on everybody's email list at that point, right? So I get this email, subject line, self-storage, no toilets, tenants, and trash. All right, that's enough to get me to open it. I'm looking around for what's my next thing, right? And I'm an entrepreneur and I'm a curious person. So I open the email. It's from this guy Scott Myers, whoever that is, and I'm reading further through the email. The tagline got me to open it, but the tagline's not true, by the way. And I give him shit about this all the time because you do have tenants and sometimes they leave trash.
Yeah, and I mean, there are toilets at these facilities. There's one, but there are
Usually one,
toilets.
not always, but usually one.
Yeah.
But you get it. It's not
Hmm.
you're not
Hmm.
dealing with
Hmm.
you got a portfolio of or you got a multifamily property, and I'm not beating up multifamily.
Yeah, there's 100 toilets,
I
maybe 200 if it's
right.
yeah.
So more likely more problems because you have
Right.
more things that can break. But
Yeah.
um so anyway, what really grabbed my attention. So the second mortgage space, as you probably just realized, as I just explained it to you, maybe peeled back layers of the onion you never really contemplated before. it's what makes that business so interesting, or what was so interesting for us was it's so dislocated and fragmented, right?
Mm,
We were able to buy these at pretty good discounts, right? That allow us to create margin, right?
yeah.
And do what we do. There was a learning curve, and we had to learn to specialize in it. But really, it was about when I was telling people who should have known better that this is what we were doing, they told us we were nuts. So there was the misinformation out there
Mm,
that makes that little niche so appealing in advertising.
yeah.
When I read through this email about self-storage, the thing that popped off the page to me was was what made it so similar to self-storage. For me, this was my interpretation, which was at the time, the stats I was reading in this email said 80% of self-storage facilities are owned by mom and pop owners.
Yeah. That's not
Now,
true anymore, but
you would,
it
what would
it
you say now? That this was
I
2016, 17.
yeah, I actually saw a statistic earlier. Shoot, I can't remember. It was I thought it was like 55 or something like that.
I haven't
So
seen that low. I'm still reading 70, north of
70?
70.
And
Yeah.
I can't
Now
remember.
it could
I don't want
be,
to misquote what I
yeah, I don't
read,
want to
but
misquote either, but
yeah.
it could be the band of self-storage that we're looking at. So
Mm, mm,
all self-storage,
yeah.
or I think they're including 5,000 square foot facilities, right? And
Mm,
those a number of facilities. So it probably depends on how it's skewed.
yeah.
Let's agree to safely say 50%,
Sure.
because that's plenty for me.
Yeah.
50% of this market is owned by mom and pop. And
Yeah.
I'm talking to your audience and you at the same time, and I know you're a self-storage guy, so you get it. But 50%, think about the misinformation and dislocation. And obviously, self-storage there's been a paradigm shift in how we operate it because of technology,
Yeah.
right?
Yeah.
And
My best deal that I bought was it was not on Google. It didn't the only advertising they had was a sign on the side of their building.
this is what
Um,
we look for.
yeah, exactly. And
It's
it
exactly
was
what we
it
look
wasn't
for.
listed as a self-storage property. I can't remember
My
why.
My
Um,
favorite thing to do if I'm going to see a property that we're about to buy or under contract or whatever, I'm in Philadelphia, let's say it's in wherever, North Carolina, Mount Airy, North Carolina. I'm driving around, and you probably do the same thing, every facility in the market. In fact, I'm taking 2 extra days because if I'm there, I'm paying the flight and hotel. I want to visit as many as I can and see what's available.
mm,
My favorite thing to do, because you map out your whole trip, right? Literally, like this, I'm going here and then here and then here, and you got it all programmed into Google, and I go. My favorite thing to do is to drive by one, slam on the brakes, turn around, and go, "What was that?" Because it's not on Google anywhere, and
oh
that's
yeah.
that's what you. Those are the gems, right?
Yeah.
And it's with that same thought process that, look, not all of the mom and pops owners are behind the times. Some of them are very sophisticated with the times, as their kids help them. But I'm sure we're buying the same type of stuff, except I'm mostly more East Coast and you're probably mostly more West Coast, right? But we're looking for that mom and pop value add. If they have a website, it's from the MySpace era. Certainly not functional. If it's, newer, you're probably not able to rent a unit or pay for it or even add tenant insurance, right?
They're the
So
ones picking up the phone when you call the facility.
boom, so what I tell people and what I tell investors when they invest with us or when I'm talking about a deal, the classic traits of the mom and pop, and then how we solve that and make it institutional management style ready, right? What one thing I always say is, look, when we're done with it, you can find it on your cell phone, you can rent a unit on your cell phone, you can pay for the unit on your cell phone, you can insure the unit on your cell phone. And everybody gets that and it makes sense. And sure enough, that's how we're creating the margin. And then you add in the dynamic pricing. From we use the Veritech, and I'm not sure if you guys use them, but we're
Actually,
able
I was
to.
gonna that was one of the questions I had. When I have guys on for self-storage, I always like to hear how you're running it. Dynamic pricing is one thing that I have not mastered. So what tool do you use?
There's a software company called Veritech, and it allows it's
Veritech.
based Veritech. Excuse me. It allows us to act like and operate like a REIT
Oh,
in your little boutique little company because it's affordable and it's doing everything the REITs are doing. We're monitoring their rates, they're monitoring ours. I mean, and these guys are changing rates intraday,
yeah.
sometimes by the hour,
Yeah.
which is crazy. It's like
Yeah.
it's like renting a hotel room or
Yeah.
an airline seat. But we're able to do that. We have that functionality inside of Veritech It's a little
Nice.
uncomfortable at first because like, whoa.
The
It's kind
prices
of like
just went
when
up. Now they're down. Now they're up.
I actually I'm in a couple months now into price labs for my Airbnb, my personal
Oh yeah.
Airbnbs.
Hmm.
That's very uncomfortable. You're like, whoa, that rate's awfully low. Hey.
Yeah, that's one of the reasons why again, shiny object syndrome.
Yeah.
My fiance and I have been even under contract at times to buy a short term rental just because we want to, and also because there's so much data out there for short term,
Oh yeah.
like Mashable and I can't remember the other ones, but AirDNA. Like it's just there's
AirDNA is a
so
great one. Yeah.
much data,
AirDNA I
and
use before that's the first tool I use. This is
yeah,
what's going on in this market.
yeah. But yeah, that's one of the reasons that I keep
And,
getting drawn to there because I'm
and
just this. I'm a
Airbnbs you
sucker
can
for
manage
data.
remotely. You do not have to be local.
Yeah.
It depending on the relationships and how you set that up. I'm ours, the one our kind of busiest one is in the Poconos in Pennsylvania. So it's a
Hmm.
mountain house, but it's a lake house. So it's on the lake, but it's right at Ski Mountain. So we're busy in the winter, we're busy in the summer. It's really all year round. But we have like a situation up there with the cleaner where they're like the handyman, the cleaner, and now they're even managing for us. But you can manage those remotely with the same type of software we're using in storage now. Price Labs is the Veritech of Airbnbs. So it's the
Nice.
same concept.
Yeah.
And management style, I'll answer that since you just brought it up. We're operating with like a remote hybrid management. So we have
Yeah.
we have a husband and wife team actually that roll between our facilities and they'll just I think they even have an RV and they just travel between them. And then for those times in between, if they're only there once a month, you heard the app, I think it's called Hydra.
No.
So it's like police and firemen, and it's almost like a handyman. Well, it depends on what their skill sets are, but it's there's what's a good example? It's not an Angie's List, but it's like it's almost like the Uber help of a app. So, but for us, you can hire locally a police or fireman or whoever is the right fit to kind of be your boots on the ground.
Huh.
So if you need somebody
What's
leaves a
the
mattress,
what's the it's just Hydra app. I we're going off on tangents here. I
I
just
know. I
Googled it to
think
try to
it's
find it.
Hydra.
Uh-huh.
If you
Okay.
Google it, you'll come up with something like that.
Yeah, okay.
I don't run our operations. I'm the CEO
Yeah, yeah,
I
yeah.
help with acquisitions. I don't get into the operations. I know it.
Mm.
I know we use it. But there are local boots on the ground. If like I was saying, if somebody if there's a problem, we can engage them to show up and take care of it. Somebody leaves a mattress behind or something like that. And I got to tell you, the best part, especially to get police when they're on duty, and by the way, why are these the guys? Because they're usually very handy anyway, right?
Mm. Hmm.
But they work shifts where they're a couple days on, a couple days off. So they're really the perfect fit for a self-storage facility, right? And when they're police, a lot of times when they're on duty, if
They'll
the
stop
property is
by.
in their, they sit out front of your facility. So it's like free security. And if
And
you're
especially in some metros, like I bought one in Lubbock, and holy crap, man, that place has a problem with homeless.
So imagine if a cop was sitting outside, a couple days a week.
Yeah,
You probably wouldn't try to break into that one,
yeah.
right? Because there seems to be police there an awful lot. So it really works out well. So
Hmm.
anyway, that's how we
No,
manage.
that I love it. And damn, we
Yeah,
usually don't do this because but we do. We're gonna have to cut it down. We're gonna maybe I'll have to have you back on because
I'd
we
love to.
we are nearing the end of the hour, and there will be another guest that coming on here soon. So I do have to push us on. I have one more question that I got to
Yeah,
ask
yeah.
though. We're gonna have to make it quick. Um, for self storage,
Mhm.
there's usually you can add additional revenue streams. Tenant protection is one that's
Yep.
really easy to add. We have been considering. In fact, we just started at one of our facilities adding U-Haul. Is that something you tried?
U-Haul is interesting. So I'm not gung ho U-Haul, but I'm not against it. I think it's very specific to the facility.
Yeah, to where you
We
are.
do not have U-Haul in place anywhere.
Mm,
We have come close. We've underwritten it. We've evaluated it. We've made offers where we were going to accept the fact that we were going to be operating U-Haul. I've learned a lot about it. No means am I an expert, but I know it is a tremendous amount of busy work is what I
Yeah.
would put. So you now are in a manned facility and they're busy. Now, if it's a busy enough area, then it's probably driving your rentals too.
Mm.
So I have seen cases where it makes total sense
Yeah.
to spend the money to have a U-Haul or an employee who's going to manage that U-Haul while they manage your facility. So I'm not saying there's no way I would say run like hell. I have seen scenarios where it's a no-brainer. Where you're like, wow, you could actually make a lot of money with this.
Yeah.
But I've also seen scenarios where we were going to buy them and absolutely get rid of it because the operator didn't even realize how much time it was draining on them and they weren't making money on it.
Mm.
They thought it was driving revenue. It really probably wasn't. And worse, it was a financial drain with the employee and just the liability they have there. So
Yeah.
it really is a very situational situation. That doesn't make sense. Very specific
Yeah.
situation where it makes
Yeah.
sense, in my opinion.
Yeah. Yeah. I'll let you know how it goes. We started with facility downtown Indianapolis, and we're like right on a main road. So we decided to try it out. We have never done U-Haul before. So it'll be interesting. And it's a facility. It's unique. We bought it only half built. Somebody, the seller, he bought it. Can't remember how many years ago, but they had only built out 5 buildings, and they were permitted and engineering designs drawn and everything for 10 buildings. So you could double the space. So there's this big field right behind the facility, downtown Indianapolis, and we're like, you can park a lot of U-Hauls back there. So we're giving it a shot, and
That sounds
we'll
like
see
it'll
what
work.
happens.
That
Yeah.
sounds like it'll work. Plus the population that you have
Mm-hmm.
sounds like that would support that and make it work. Where I've
Yeah.
seen it not make sense is the more rural you get,
Yeah.
the less of the population. You just don't have the activity. If you
Yep.
don't have the activity, it's not driving revenue for you. It's just a pain in the ass.
Yep. All right, man. Well, usually we hop into the quick question round, but I'm gonna have to cut it short. We
I'm
can't do the quick
sorry. I
question
told you I was
right.
talking
No,
too
no,
much.
no. It's been really interesting. Your story's been interesting. I loved hearing about those second mortgages.
Yeah.
So I do appreciate having you on. Maybe next time we'll do the quick question round. But I'm gonna go right to the end, which is the last question in the quick question round, which is you've given us a lot to think about. I'm sure people want to reach out. Tell us how can they find you, and then what can they expect when they reach out.
Oh, yeah, perfect. Thank you. Our website is belrosegroup.com. So BELROSE group.com. Or my email, joe@belroseam, A as an asset, M as in management.com. And what you can expect is, well, first of all, what I would love to hear from you is if you're interested in investing passively in self-storage, we're always putting out opportunities for our investors. But also, and one of my passions actually is I mentioned Scott Myers earlier. He was my mentor, and I actually teach at his academy now, and we also mentor students. So we have a consulting business. We're constantly putting people into self-storage deals, smaller deals that just don't fit our capital stack, but they're in our funnel because we're constantly marketing for deals. So there's great deals out there, and as you know, it's hard to find a good deal. So just because we find good deals, rather than kick them to the curb, I'd rather help somebody get into a great deal. So that's what you could expect. You expect us to, if you have interest in self-storage, whether active or passive, you can expect us to be able to at least try to help you. We'd love the opportunity. So thank you so much for having me. And by the way,
Yeah.
kudos to you and everyone who's like you, because when I was coming up, I'm Gen X, I'm 51. When I was trying to break into this business with my 3 jobs, right? Or any real estate, but I didn't have podcasts to listen to while
Yeah.
I was driving around. So thank you for putting out great content and information for the next generation who's coming up and wants to get into real estate. So
Well,
it's
yeah.
people that are
Absolutely. I mean, it's a pleasure
that are
for me,
moving
and
markets.
I also get to benefit, get to meet new people like you, and learn about things like investing in second mortgages. It's something I wouldn't have learned had I not had this conversation.
I'm a little
So
jealous of your job.
that wraps it up. Joe, again, thank you very much for hopping on the show. If you guys want to reach out to Joe, all you got to do is click the little more in the description. It'll pull down that full description. In there, you can find his URL and his email. So
Awesome.
that does wrap it up. Thanks for hopping on the show.
Thank you. Take care.
Bye.